Hello everybody, this is AK. I'm back. So this is going to be a very short video, a fast one before I go to the hospital. I'm making this video because a friend SMS'd me to say that he's dumping his CPF OA money into bank stocks today, and apparently he's taking comfort from how the bank stocks DBS, OCBC and UOB seem to have stabilized, right? And that the sell down was just a scare, right? The market volatility he thinks is a thing of the past. Well, I think this is an important video to make because I've said many times before that investing in our local banks for passive income generation is a good idea because they are well run, well capitalized, and they grow more valuable over time because they only pay out half or roughly half of their earnings as dividends, and they retain half of their earnings. So they become more valuable investments over time, right? And but when it comes to prices, I always take some charting lessons when I look at prices, right? I think we should all learn to read charts when we look at prices, but of course just looking at prices alone is not investing, right? But of course it is helpful to have some knowledge of technical analysis, right? And if you have not seen my last video yet, you might want to watch that, or you might want to watch it again for a refresher anyway. I said that OCBC, the support was at $14, and it managed to recapture that $14 support, but it has gone XD and is now trading below that $14 support, right? And when a support level is broken, we have to remember that it becomes the new resistance, the immediate resistance to watch. So that support is no longer support for price, it is now resistance. It acts as a ceiling against prices going higher, right? And in my last video I say I'm looking to possibly add to my investment in OCBC at $13 per share, right? It's still in the realm of possibility, right? And could it happen? It could happen, but would it? I don't know, right? But this is a word of caution because for people who are dumping in a large sum of money into buying OCBC's stock now, for example, they have to be cognizant of the fact that $14 is no longer support, but it is resistance. And the same goes for DBS. I said $35 was support and it was broken, and it went down as low as 32.70 something at one point, and I say I was looking forward to buying more at $32.50 or even $30 per share, which are the two support levels I've identified if prices were to go down even more. And $35 now is the resistance. It's no longer support, it's resistance, right? So I think DBS is $34 today, right? And the same goes for UOB. $30 was support, but now $30 is resistance, right? It's 29 something, and if selling pressure should resume, we could see $28, right? So just be cautious, don't throw caution to the wind just because things seem to have stabilized and we want to get in quickly, or maybe because we missed the boat before, or we have some spare money and we really want to own a larger chunk of the banks. I would still say nibble, buy slowly, and if prices go down even more, we can buy more. Or if prices should go up, we want to see that they recapture those support levels, and by that I mean they should break the resistance. OCBC at $14, UOB at $30, DBS at $35. Break those resistance levels, and then as the price comes back down and retest those levels, they should bounce back higher. That means the support levels, the resistance levels are now would then become support levels. That's what we call resistance turn support, right? But for now it is support turn resistance. Okay, that's all for the short video. Bye bye.